Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 19th of March. Starting off with the FTSE, which is above the 50-day line, above the old broken February support there at 8,600, and above that, we're looking for the top of that rising trend channel from the end of 2023 as high as 9060 by the end of next month, which is obviously optimistic, but that is the setup we have at the moment, especially while we're above that 50-day line. 86.10. RSI is pushed back above neutral 50, which gives us extra confidence that today's slightly sloppy start to trading will be taken up by the bulls. Moving along to the DAX, which has outperformed the FTSE by quite some distance in the recent past. Here we can see the rising trend channel there heading for 24,000. We're looking for that by the end of next month or even sooner. We had an unfilled gap to the upside yesterday, 23,100. So above 23,100 on an end-of-day close, looking for the top of the channel. Worst case at the moment, the floor of the channel, 22,600. RSI, double RSI bounce up above neutral 50 in the recent past and one at the beginning of the month. So that appears set fair. Not so set fair at the moment has been, or is, the Dow. Still struggling with the 200-day line there at 42,000. Below that, we still have the chance of retesting September support there at 40,000, unless some MAGA investors come in there. Best case at the moment is we managed to get above that 200-day line through 42,000 and head back to the initial March resistance area at 43,000 by the end of next month, but it is still quite a struggle. I suppose the positive here would be to draw a support line there from back in November and say that this market's already bounced off the floor of a notional triangle, but let's see if we can stay above 41,000 on that basis. Moving along to Bitcoin, where we're still concerned about the success of the trader who's gone short of $332 million of the stuff at 84,000. He's still, or he or she is still on side at the moment, as we are at 83,600. And the resistance there is actually at the notional entry point of that trade, the 200-day line, which is a fair thing to do on a technical basis. The potential exits on that short are 68 or 69,000 and 58,000, which you can see make kind of sense on the chart looking back at it. In the real world of the charting situation here, 74,000 is probably the worst we would expect while we are below the 200-day line. An end-of-day close above the 200-day line takes us back to the 90,000 area and ideally back to the 50-day moving average at 91,500. The negative at the moment and the thing in favor of the short is the way that the RSI is still below neutral 50 and has been for most of this month. Moving on to gold, where everybody is still very excited about it being, well, actually they're going a bit quiet about it being above 3,000. Here we've got, we've broken above the old rising trend channel there from February last year, and that leaves us with a new, steeper rising trend channel at the moment, which has been in place since November. The top of the channel there heading for the 3,200 level, and we're looking for that by the end of next month or even sooner, while there's no settlement of the geopolitical situation at the moment, which looks like a bit of a disaster. Moving on to the stocks and starting off with one which seems to be in a decent trend. I interviewed the company, I think, last month at some point. The company raised money. It's ricocheted off the 50-day line there at 4 3/4 on Borders and Southern. And also we've had an RSI rebound at neutral 50s. That suggests that fresh leg to the upside is imminent, and how far that could stretch is indicated by the top of the rising trend channel there from October as high as 9 pence. Which might be seen as soon as the end of next month while we're above 4 3/4 pence. On to Capex, which stirred yesterday as if it was waiting for Dr. Graham Cooley. He's arrived today, or he's at least changed his role from Ned to chairman, and we already had a bounce off RSI 50. We bounced off the 50-day line there at 0.13, and as we said yesterday, we're looking for 0.17, the top of the triangle, ideally up to the rising 200-day line at 0.19. Hopefully the shares are on their way for that by the end of next month. On to Capital Metals, which stirred yesterday as well and has been stirring quite nicely in the recent past. We've got a broadening triangle base there from back in June, top of the triangle there at 2.6 pence. That's what we're looking for by the end of next month, especially while we remain above the 200-day moving average at 1.8 pence. So let's see if CMET comes up with the goods. Company that's come up with the goods and has played the PR game very well in the recent past with its rockstar arrival is Capai. Here you can see that we've hit our second. We already hit our second target there at 0.1 pence. I'm looking for the final near-term target at 0.19, the upper parallel of that red October resistance line, and looking for that by the end of next month while we're above the previous target, 0.11. Also worth looking at Celadon, where the company's struggling on, I suppose is the fair thing to say, but very interesting candle today. So we opened really low off the back of the RNS, which has complained that some money had not arrived, but actually it does have some money. So we've opened at the low and so far at the high of the day, and that's also a bear trap rebound from below the old low, November low there at 12 pence, above 12 pence on an end of day close basis, looking for at least the 50-day line at 18 pence. Ideally, if everything goes well, up to 36 pence by the end of next month, because the stock can move when it wants to. That sort of power drill rebound, opening at the low, closing at the high, off a fresh low, a very strong technical signal. Moving along to stock which is not quite in the same league, hopefully a better league actually, is FDM. Here you can see that we've had a bear trap island reversal, so we gapped down back in January and gapped up today quite strongly through the 50-day line at £2.40, above £2.40, looking for the top of the broadening triangle base as high as £2.90 by the end of next month. But as I remind listeners or viewers, the bear trap island reversal tends to be the strongest charting setup in the book. On to Oracle Power, which is now in the run-up to an MRE, which hopefully aficionados will know what that stands for. Here you can see that we've gapped up through the 50-day line. Recent resistance around the 0.028 level or 27 level, but hopefully the shares could actually do a little bit better than that, obviously if there are no sneaky fundraisers thrown in the mix in the meantime. Best case scenario is probably the top of that triangle that I'm attempting to draw at the moment while I speak, and that would be up to 0.04 by the end of next month, barring any dilutive effects on the company. Good to see Priority One build on yesterday's contract announcement. I think it was $100,000 or something like that, which changes the dynamic of the company. We've got a resistance line there running at almost exactly where the share price is now. In fact, the shares have gone through that. So let's say that's 4.1 pence. Above that, looking for a push to the 50-day line at 6 pence, which was the old January support for the shares. And I think that would be quite a relief for the stock. The other point to note is they've got a bit of bullish divergence in there, so lower lows for March, but the RSI staying flat. So when you add in yesterday's open at the low, close at the high off the low, it looks as though maybe there's a bit of a relief there for PR1 shareholders. Another situation which tends to keep people on their toes is Tower Resources. What's exciting here is that we've got bullish divergence after the new low for March, or the new low for 2025, around 0.02. The other headline is that it's a bear trap rebound, and also it's a rebound back above a rising 200-day moving average, the black line there. That suggests that we should at least get up to the 50-day moving average at 0.027. Fans of the shares will be looking for the top of that triangle there from back in October as high as 0.04 by the end of next month. As you can see, the shares, when they want to move, they can spike quite nicely. Moving along to a really juicy looking chart from 10 Lifestyle. Here we managed to, actually this is a bear trap island reversal, but multiple ones. So we gapped down there back in November and December, or December and January, and have gapped up twice or three times since then. So a proper charting setup above the 200-day line at 59 pence, looking for the top of that broadening triangle from May last year as high as 78 pence by the end of next month. Moving along to Westminster Group, where a lot of people are willing the shares higher. They've managed to hit the first target there at 1.7 pence, which is the top of that falling trend channel. Next target is up to 2.6 pence at the top of that broadening triangle there from September. We gapped up as well last month, so we've held that gap, and all we need now is a rising 50-day line to give us a bit of extra strength to get up to 2.6 pence by the end of April, while we're above that 1.6 pence area. On to the last two. The first one is Zanaga, which had a stellar run back in December. It looks like it's ready to deliver a new run, although there's obviously somebody quite keen on selling the shares through 11 pence, but maybe third time lucky to get up to 11 pence. Top of that channel there, as high as 15 pence, which I suppose would be a best case scenario target for the end of next month, while we remain above recent support at 7.5 pence. Finishing off with a stock which is a rather larger market cap than normally used to, but what can be said here is that Zegona proves that elephants can gallop. The market cap here, 4.5 billion, and it's rising like a small cap on heat. Here you can see rising trend channel there from back in May. Top of the channel, £8, and that's valid while we hold above the previous target area at £5.90. That's it for me today. More updates tomorrow.